Hey everyone, ready for another deep dive?
I am. Let's do it.
All right, today we're heading to the Nevada desert.
Oh, sounds hot.
Well, it might get heated as we dig into Strong Mines.
Strong Minds. I've heard that name floating around. What's the deal with them?
They're a gold mining company, but with a twist.
Okay, I'm intrigued. What kind of twist are we talking about?
They're all about being eco-friendly. Solar power, special trucks, the whole shebang.
Whoa, hold on. Eco-friendly gold mining. That's not something you hear every day.
Right. It definitely caught my attention. They're even aiming for a Class 4 ESG rating.
Now that's impressive, especially for a mining operation. ESG ratings are becoming a big deal for investors.
Exactly. So we're going to break down their whole pitch, look at their technology, and of course those financial projections.
Sounds like a solid plan. Let's see if they can really strike gold with this eco-friendly approach.
All right, so Strong Minds is pitching this hub and spoke model for their operation.
Hub and spoke, like a bicycle wheel.
Kind of. They're setting up a central processing facility.
Okay.
And then they'll haul the ore in from different mines around it.
Ah, I see. A central hub for processing.
Exactly. It's all about efficiency. And they're projecting a pretty significant production capacity.
Makes sense. Centralizing things can really streamline operations.
But remember that ESG rating I mentioned? They're really pushing that as a major selling point.
And for good reason. Investors are increasingly looking for companies that prioritize environmental, social, and governance factors.
Absolutely. It's not just about profits anymore.
Right. It's about sustainability and responsible practices, too.
So Strong Minds is saying they can hit that high ESG rating with a few key things. First, they're going all in on solar power.
Solar power for a mining operation, that's ambitious.
Yeah, they're planning to buy all their power from a solar farm right there on site.
Wow, that's a strong statement about their commitment to renewable energy.
Then they've got this fluid oxygenation system that they claim can recover way more gold than traditional methods.
Really, now we're talking. That could be a game changer for their profitability.
And to top it off, they're using these super efficient, custom-designed trucks to haul the ore.
Interesting. So they're tackling emissions on multiple fronts.
It all sounds very impressive,
All right,
but we're here to dig deeper.
of course. A pitch deck is one thing, but we need to look at the hard data and see if their claims hold up.
Exactly. We need to analyze those financial projections, scrutinize their technology, and assess those risks.
Because, let's be real, mining is a risky business.
Absolutely. So let's start with their claim of recovering 10% more gold annually, thanks to this fluid oxygenation system.
10%. That's huge. We're talking thousands of extra ounces of gold per year.
And at current gold prices, that translates to millions in additional revenue.
But the question is, can they really deliver on that promise?
Right. We need to understand how this technology works, and if it can really scale up to meet their production goals.
And what about those super efficient trucks? Are they truly making a significant environmental difference?
That's another key piece of the puzzle. We'll need to look at their fuel sources, their emissions, and their overall impact.
Okay, so we've got the technology angle. Now let's talk about their development plan. They're not going to be fully operational right away.
Right. It's a phased approach, but they're still projecting profitability in year 2 despite a big upfront investment.
That's a bold claim, especially in the mining industry, which is known for its long lead times.
We need to see how realistic that timeline is, considering all the potential hurdles they could face.
Like permitting delays, fluctuating commodity prices, and the always present risk of operational hiccups.
Exactly. So before we dive deeper into all of that, let's quickly introduce the brains behind Strong Minds.
Okay, let's meet the team.
First up, we've got Alan Niles, the geologist. He's got over 40 years of experience in Nevada's gold mining industry.
Wow, that's a veteran of the Nevada Gold Rush.
He's worked with some big names like Hecla and Barrick Gold.
Impressive. He must know the ins and outs of this business.
And get this, he even worked on the very first leach pad built in Nevada.
Seriously, that's some serious street cred in the gold mining world.
Right, so he definitely knows his stuff. And then we've got Eric Stevenson on the financial side.
All right, the money man.
He's got over 5 decades of experience in corporate development.
5 decades. That's a lifetime of experience.
He specializes in capital structure, operations, and management.
So he knows how to build a company and make it run smoothly.
They seem to have a pretty solid team in place.
Yeah, on paper, it looks like a good mix of experience and expertise.
But as always, we need to dig deeper and see how they've navigated challenges in the past.
Exactly. Experience is valuable, but it's how you handle those tough situations that really matters.
So we've got Nevada, gold, and a company trying to do things differently. But what about that ESG factor? It's a big part of their pitch.
Right, they're really pushing that Class 4 ESG rating. But what does that actually mean in the context of gold mining?
That's a great question, and one we'll tackle right after the break.
Stay tuned, folks. We're just getting started.
So we're back and ready to dig deeper into that ESG factor.
Right, because it's not as simple as just slapping an eco-friendly label on a mining operation.
Exactly. And when it comes to ESG ratings for mining companies, things get a bit murky.
Yeah, the traditional ESG rating system wasn't really designed with mining in mind.
It's like trying to fit a square peg in a round hole, right?
Exactly. So how do we even begin to assess StrongMines' claim of being a Class 3 ESG company with aspirations for Class 4?
Well, they're actually pushing for a new classification system specifically for mining companies.
Makes sense. Mining has its own unique set of environmental and social impacts.
Right. They argue that a mining-specific system would provide a more accurate assessment of their sustainability efforts.
And that's important because investors are becoming more savvy about ESG claims.
They want to see real action, not just greenwashing.
Absolutely. Transparency and data are key.
So under this proposed mining-specific system, the top-rated companies in Nevada are Coeur, Newmont, and Barrick.
Those are some heavy hitters in the gold mining world.
And they're all considered Class 3.
So StrongMines wants to not just join that elite group, but surpass them.
Ambitious, right?
Very ambitious. But if they can pull it off, it would give them a major competitive advantage.
Especially with investors who prioritize sustainability.
Exactly.
Okay, so let's break down their ESG strategy piece by piece. First up, that commitment to 100% solar power.
That's a big one. It's not easy to power a mining operation entirely with renewable energy.
They're planning to lease a chunk of land to a solar company and then buy the power back.
Smart move. Leveraging expertise and potentially reducing their upfront costs.
They even mentioned a possible federal grant that could cover the solar plant construction.
Wow, that would be huge. We're talking about saving over $50 million.
Right. But of course, there's always that what-if factor.
Exactly. What's their plan B if that grant falls through?
We need to look into that. Relying on external funding always adds a layer of uncertainty.
Agreed. Investors need to be aware of those contingencies.
Okay, so solar power, check. Now let's move on to their fluid oxygenation system. Is it really as revolutionary as they claim?
That's where the rubber meets the road. This technology is at the heart of their claims about higher gold recovery rates.
They're partnering with a company called Aqua Royal Spring, or AQR, for this system.
AQR, I've heard of them. They're known for their expertise in fluid management and oxygenation techniques.
Right, so instead of just spraying cyanide solution onto the ore, they're pushing oxygen into the heap as well.
Interesting. And what's the supposed benefit of that?
The oxygen is supposed to help the cyanide penetrate the ore more effectively.
Ah, I see. So it's all about maximizing the extraction of gold from the ore.
Exactly. And they're claiming this technology can recover 80% to 90% of the gold.
That's significantly higher than the typical recovery rates for heap leach pads.
Right, which is usually around 70% to 73%.
So if it works as well as they say, it could be a game changer, both for their profits and their environmental impact.
But that's a big if. Can this technology really scale up to meet their production goals?
That's the million-dollar question. We need to look at AQR's track record and see if this technology has been proven in real-world mining operations.
And speaking of real-world operations, what about those custom Kenworth trucks? Are they really as eco-friendly as they make them out to be?
Well, they're designed to haul twice as much ore per trip.
Which means fewer trips and potentially lower fuel consumption.
Right, but we need to look at the bigger picture. What type of fuel are they using?
And what about the emissions associated with manufacturing those trucks?
We can't just focus on the operational side of things. We need to consider the entire life cycle.
It's a good reminder that sustainability is about more than just flashy headlines. It's about a holistic approach.
Absolutely, and it's something investors need to be mindful of when evaluating these claims.
Okay, so we've covered solar power, fluid oxygenation, and super efficient trucks. But how do those innovations translate into actual financial projections?
That's where things get really interesting. StrongMines is planning to build a segmented pad facility.
Segmented pad facility. Break that down for me.
Basically, it means they'll have 4 separate leach pads.
Okay, and why is that important?
Because it allows them to process different types of ore more effectively.
So instead of just dumping all the ore together, they're separating it based on its characteristics.
Exactly. That way they can optimize the processing for each type of ore.
And that ties directly into their projected gold recovery rates.
Right, and ultimately their profitability.
But building this specialized facility is going to cost them a pretty penny.
They're estimating $125 million per year for 4 years straight.
Wow, that's a significant upfront investment, especially for a company that's not yet generating revenue.
It's a gamble, for sure. But they're betting that those efficiencies will pay off in the long run.
They're projecting profitability in year 2, right?
That's the plan.
Right.
But it's worth noting that their cost per ounce of gold mined is expected to be pretty high initially.
Makes sense. They're front-loading a lot of the costs to get the operation up and running.
Right, and they're counting on those ESG initiatives and their innovative technology to bring those costs down over time.
So they're projecting a high cost per ounce in the beginning, and then a gradual decrease as they become more efficient.
Exactly. It's a classic ramp-up scenario.
And by year 5, they're projecting their cost per ounce to be significantly lower.
Down to $1,838 per ounce.
Okay, and at that cost, what kind of revenue are they anticipating?
They're projecting a whopping $1 billion in revenue.
$1 billion. That's a bold statement.
And over $400 million in pre-tax profits.
Whoa, those are some eye-popping numbers. But we have to ask, what are the risks? What could derail this whole projection?
Well, there are a few things to consider. First and foremost, the price of gold.
Right, it's a commodity, and prices can fluctuate wildly.
Exactly. If the price of gold drops significantly, their revenue projections could take a big hit.
And then there's the performance of their fluid oxygenation technology.
If it doesn't deliver those promised high recovery rates, their cost per ounce could be much higher than projected.
Which would eat into their profit margins.
We also can't forget about the potential for permitting delays.
Those are a common headache in the mining industry.
And they can add significant time and cost to a project.
And what about those operational setbacks? Mining is a complex business, and things don't always go as planned.
Equipment malfunctions, unexpected geological conditions, you name it.
Any of those issues could lead to delays and increased costs.
So yeah, there are definitely some risks to consider.
But also potentially big rewards if they can execute their plan.
It's a high-risk, high-reward scenario.
It all comes down to how much risk you're comfortable with as an investor.
And how much you believe in StrongMines' vision.
Speaking of vision, let's circle back to the team behind this whole operation.
Right, those 2 guys we mentioned earlier.
Alan Niles, the geologist, and Eric Stevenson, the finance guru.
On paper, they seem like a solid duo.
Niles has tons of experience in Nevada's mining industry, even worked on the first leach pad ever built there.
Impressive, but we need to know more than just how long he's been in the game.
Right, what about his track record with innovative technologies? How has he handled challenges in the past?
Those are the kinds of questions investors should be asking.
And then there's Stevenson, with his decades of experience in corporate development.
He seems to have the financial chops, but can he manage the complexities of a large-scale mining operation?
Have they ever led a project of this magnitude before? How have they dealt with setbacks?
Those are key factors to consider when evaluating any investment opportunity.
So we've looked at the technology, the financials, the team. We've identified both exciting potential and some serious risks.
Now it's time to put it all together and answer the big question. Is StrongMines a golden opportunity, or are we looking at fool's gold?
Stay tuned for the final part of our deep dive, where we'll weigh the pros and cons and help you make an informed decision. Okay, so we spent a lot of time digging into StrongMines, their tech, their financials, their leadership team, their big ESG push.
We've seen some really exciting stuff, some things that make you go, that's interesting, and of course, those inevitable risks that come with any mining operation.
Exactly. So now for the million-dollar question. Should you invest?
Well, if I had a crystal ball.
Yeah, right. If only it were that easy.
Seriously. But look, we can break it down. StrongMines is basically presenting a new model for mining. Profit and sustainability hand in hand.
Right. It's like they're trying to have their cake and eat it too.
And hey, maybe they can. Their financials are pretty impressive, at least on paper. Lots of growth projected if they hit their targets.
But then you've got that big upfront investment, the reliance on unproven technology.
And the ever-present volatility of the gold market. We can't forget about that.
Exactly. So where does that leave us?
Well, it all comes down to your individual circumstances. What are your investment goals? How much risk are you comfortable with?
And honestly, how much do you buy into StrongMines' vision?
Because they're asking investors to take a leap of faith.
Yeah, they're betting big on this whole ESG-friendly approach. They're saying it's not just good for the planet, it's good for business.
And that could be a game changer if they can prove it.
But there's no guarantee.
Hmm.
Mining is inherently risky, and this is a new approach with a lot of unknowns.
So, my advice. If you're even remotely considering investing, do your homework.
Due diligence is key.
Absolutely. Dig into those financials. Look at the data. Research that fluid oxygenation technology.
Talk to financial advisors, get a second opinion, weigh those potential rewards against those very real risks.
Because at the end of the day, it's your money.
And it's a decision you shouldn't take lightly.
Well said.
We'll definitely be keeping tabs on Strong Minds. Maybe we'll revisit them in a future episode, see how things are panning out.
Yeah, it'll be interesting to see if they can walk the walk after talking the talk.
But for now, we hope this deep dive has given you some food for thought.
Knowledge is power, folks, especially when it comes to investing.
So stay informed, stay curious, and until next time, keep diving deep.